Good morning. This is Dylan Jovine with Behind the Markets. Happy Monday. Today is Monday the 16th, Monday, March 16th. And today I'd like to talk about the housing market. Actually, to give a shout out to the Senate, which is, really behind this, really shown that they're really behind in a bipartisan way, a housing bill that really tackles affordability. And this is one of those bipartisan things because both Democrats and Republicans want to attack or tackle the number one issue here before the midterms, which is affordability. And in looking at the bill, I honestly feel that they read one of our special reports that we pushed out over a year ago on the crisis in the housing market, because the report is written to address the three main problems that we talked about in this report. So I kind of wonder if those people are marketing it into areas where these people really just took what we were saying and decided to make a bill about it, or we just identified it. Anyway, it's a feather in our cap. But here's the crux of the issue. 10 years ago, the average house cost $200,000 in America. Today, the average house costs about $400,000. Now, that's great for homeowners, right? The price of the home has doubled. The problem with that is that incomes have only gone up about 14% during that same period of time. That's a big problem for new home buyers, because when you buy a new home, you go to your bank and you say, look, or a mortgage company, I'd like to buy a home. Mortgage company says, look, okay, we'll lend you money, but your mortgage will be about 30% of your income. So if your income doesn't really go up, 30% is not going to get you a home that's worth double what it was 10 years ago. So that's a problem. And a lot of people don't know this, but in stocks, we have the PE ratio, a price to earnings ratio. In homes, we have the PI ratio, the home price to income ratio. And normally it's at about 3.4 times. Basically, a home should cost about 3.4 times your average income. So if you make $50,000 a year, a home should cost about $160,000 a year. Right now, the average home has a PI ratio of 5.8. So it's almost 80% above what it normally is. And that is a problem, because here at Behind the Markets, we have a bunch of young people that make good money and they can't even afford homes. It's crazy. So they're renting. As we pointed out in this special report we put out there are three issues here. Number one, a lack of construction. Basically, there's so much red tape. And basically, at the state level, the city level, it's crazy. So local opposition can create delays that drag out building processes for months, even years, which drive up costs and disincentivize builders from actually building things. So this legislation would allow communities to use existing federal development grants to build new housing, which is great. And it would basically reauthorize and update an existing housing program to spur the construction of more affordable housing. That's issue number one. Issue number two, which we really talk about in our special report on this, is the pushing for more factory-built homes. Basically, really unleashing more modular homes. Remember something, I live in an older house. When you look at older houses, they were like 1,700 to 2,200 square feet. And in the last 20 years, we've gotten this idea of McMansions, right? They're just huge monstrosity houses, 3,000, 5,000 square feet, basically rooms you never even go in. It's unbelievable. But building construction costs have gotten so high that the question is, does that size of a home make sense? Or are we going to go back to smaller homes, including modular homes? So this legislation also pushes for the development of more modular factory-built homes, which is great. Really, they'll be pushed under a federal umbrella, which would allow builders to basically standardize their designs and expand them so they could deliver communities, basically fast structures. And then finally, one of the big things that we talked about is limiting big investors from owning single-family homes. Basically, you have a situation in some towns where big investors, BlackRock or this one or that fund, have basically bought all of the homes in those neighborhoods and they're renting them out to people. And this causes a lot of problems over time. Okay, number one, if you have a whole generation of Americans that don't own homes, guess what? In 20 years, you're going to have a whole generation, or 30 years or 40 years, you're going to have a whole generation of Americans that can't pay for their own retirement, because the home is the single greatest way to build wealth for most Americans. That's a problem today, in the sense that the retirement issue will pop up in the future and really create a lot of anger, and it'll put costs on the rest of the country for these people that couldn't get homes when they were younger and build their nest eggs. The other thing is, let's be real, it creates more populism. If you're a homeowner, by definition, you're more conservative. The system's working for you, right? You say to yourself, I own a home. I don't want too many crazy changes going on. But if you don't even own a home, if you're sending in a rent check every day, you don't have anything to defend. You're just mad. You're not building anything. You're sending in a rent check to a big institutional Wall Street corporate owner, God knows who it is. And it makes you more prone to populism and really threatens the political fabric of our society. So this is actually a real fundamental issue for this country. And it's one of those issues that's really challenging to solve. You really got to think both in the short term and the long term, but it creates real problems today and more abstract problems going forward, because you get more populism, you get more anger for people that don't own homes, and people like that, that's how you start the Russian Revolution. People like that want to overturn the system, because again, it's the difference between the haves and the have-nots that have started every revolution in history, basically. There's one exception to that, and that's the American Revolution. But throughout history, when the have-nots get enough resentment, they decide to change the politics of a situation and just forcefully take it from the haves. That's something you got to be very, very careful with. And home ownership has been a very important piece of equalizing the wealth disparity in this country. Basically, our democracy depends on our ability to get more people involved in the upside of it. Anyway, I'm happy to see this through the Senate. I'm happy to see it's bipartisan. I'm happy to see both sides are attacking affordability. And I look forward to this actually becoming a full law. Anyway, that's all I have. Have a wonderful day. I'll see you tomorrow.